Hi, today I will engage the Indian financial system. First, we have to discuss about the meaning. The financial system enables the lenders and borrowers to exchange funds. India is a financial system that is controlled by independent regulators in the sector of insurance, banking, capital, market, and various sectors. It means every organization or every sector is regulated by the one regulatory authority. For example, banking is regulated by the RBI, insurance is regulated by the IRDA. The Indian financial system is one of the most important aspect of the economy development of our country. The system manages the flow of funds between the people of the country and the ones who may invest in wisely for the betterment of both the parties. It means financial institutions collect the money from the investors who have the surplus amounts and invest or mobilization to the businessmen who are invested in productive avenues. Overall view of the financial system. The services that are provided to the person by the various financial institutions, including banks, insurance companies, or pension funds, etc., constituted financial system. It means all the financial institutions are managed and regulated by the separate authorities. Capital market is authorized or regulated by the SEBI. Pension funds comes under the Security Exchange Board of India. Then features of Indian financial systems. It plays a vital role in the economic development of the country as encourages both savings and investment. Every economic activities need the financial assistance. For this reason, financial system collects the amounts from the depositors and these funds mobilization to the investor who need to invest in the productive avenues. Next one is it helps in mobilization and allocating oneself. It means collecting the funds from the person who have surpluses and given to the person who are required it. Next, it facilitates the expansion of financial institution and markets. Financial institutions are the organization that provides the financial services to the needy persons, that is borrowers and lenders. Financial market is the market where securities are traded. It helps to expansion of financial institution and market plays a key role in capital formation. Capital is the lump sum amount invested in the business. Collecting the small amounts from the different investors and club it and given to the businessman for the capital formation. Next, it helps for a link between the investors and one's savings. Investor is a person who invests in the productive avenues and saver is a person who have saving the amounts or save the surplus of income. It also concerned with the provisions of funds. Provisions of funds, it means it reserves the some funds to the future expansion of the business. Then next concept is components of Indian financial system. There are five basic components of the financial system. First one is financial institution, next financial markets, next financial instrument, then financial services and financial regulator. Financial institution is the organization that provides the financial services to the borrower and lender. Then financial market is the market where the financial securities or where the financial instruments are traded. Financial instruments is the instrument that provides the facility to investor to invest and borrower to borrowing the funds. Financial services are the commission based services. These services is provided by the financial institution to the needy person. For example, leasing, hire purchase, insurance, portfolio management, merchant banking. These are. Next one is financial regulators. Financial regulator is a regulatory authority to regulate the financial institutions and financial markets and financial instruments. In that, first one is financial institution. The financial institution are a private or government entities which offer several services to the general public and businessmen for the management of funds. It means this organization provides the financial assistance as well as the advisory services to the businessmen and investor who have the surplus amount and who requires the amounts to invest in the productive avenues. The financial institutions work as an intermediary between depositor or investors and borrowers. Thus, financial institutions fulfill the gap between the lenders and borrowers. It means the financial institutions link creating the linkage between the investors and the borrowers. Investor is a person who have surplus amounts. Borrower is a person who requires the amounts. Thus, financial institutions fulfill the gap between the lenders and borrower. Lender is a person who lend the amount and borrower is the person who borrow the amount from the financial institution. For example, commercial banks, cooperative banks, insurance companies, stock brokers, mutual fund, and the some are the examples. Commercial banks are the accepting the deposits and given to the needy person. Cooperative banks is organized by the voluntary association of the persons. Insurance company is the protection given to the protection against the damages. Stockbroker is a person who brokerage or who trading the stocks on behalf of the customer. Mutual fund is the fund. It is helpful to in portfolio or small investors to invest in different companies' securities. The financial institution can be two types. One is banking institution and non-banking institution. Banking institution means accepting the deposit from the depositors and given or mobilization of deposits into the needy person, just like a loan. Then non-banking financial institution. It is called as NBFC. Non-banking financial institution doesn't accept the deposit or cash from the public, but offer the various financial product and services to their customers. These NBFC organizations do not collect any amounts from the depositors, just like on the basis of deposits, but they have to provide the financial services regarding the leasing or hire purchase or consumer durables, just like, for example, mutual funds companies, insurance companies, stock brokers, and primary dealer. Primary dealer is a person who traded the primary issue or public issue offered by the organization at the first time.